Okay, hi there, traders. Just let me know if you can hear me. I've been playing around with a new alert. I'm not sure if it was coming through directly to you anyway. Thought it might be easier just sending out the link on a push notification so you click it and you go straight to the streaming channel. For some reason it's not working on my Apple phone. Not sure why. So if anyone's got mobiles, can you just give it a bit of a test, see if it actually goes through okay? Anyway, Sam, g'day, John. Thanks, mate. Hope we're all well. Enjoying these markets. It's up a bit at the moment, but it hasn't been a flash day for me, really. We had a bit of a sell-off on Friday coming to the end of the week, and it was probably the long weekend in the US. And look, doesn't make a lot of sense. One day we're up, one day we're down. I think it's just chopping people around a bit, flush them out, get them nervous, ramp it straight back up. Yeah, a bit of argy-bargy on the index at the moment, but either way, it's ticking away nicely. So it's probably, g'day Pete, probably a good idea that we just go through. I want to start with some bigger, longer time frame charts and just where the markets are. I was looking at it over the weekend. I've started off some weekly and just work our way backwards to see. And it's phenomenal to see, say, the US markets on a weekly chart. It looks like it's just one big spike straight up. And that's just a pure, as we know, it's a pure stimulus spike. So we'll take a look at those. We'll take a look at crude, where that's going to. I mean, we've been a bit of an advocate for that 60 mark for a while, and it's ticking away nicely, and it's flushing people out, banging straight back up. So we'll have a look at that. So if anyone that's new, welcome to Trade Setup. So this live streams at 12:30 each Monday, where we talk about the markets. And first half an hour is just my views on what we're looking at, where we could be going, current markets to keep an eye on, and then generally the second half an hour we have a bit of a chat about anything you want to take a look at. If there's a stock, generally it's ASX based, but I like to keep that macro view and really have a look around at the macro picture, because otherwise, if you don't have much of an idea on what's happening on a macro level, generally at the moment it's been fine. You don't have to really care, but there's going to come a time when you wonder why there's a big sell-off, and that once in a blue moon sell-off can really destroy your account and just close you to pieces. Because we'll tear you to pieces, sorry, just because it'll catch a lot of people off guard. So we'll just have a look at what's happening in the macro picture. The Aussie, a few bits and pieces that's important to us. You got crude, copper. Copper's bounced straight back up. So if you don't believe in technicals, go and have a look at the copper chart in the 30-minute, which we will. Just flushing people out and banging straight back up. So it went straight down through support, straight back up again. Worked on iPhone. Okay, so it's just mine, John. As per usual, just me. All right, so anyone that's new, like I said, we only do general advice, so nothing specific on here, just our own points of view and what we see happening. Let's minimize that. I'll get straight into it. Transition across there. So that should be all good on the screen. I think the left-hand side of the chart might be a bit missing, but it's mainly want to focus on the right-hand side. So we're on the dollar index. This isn't a weekly chart in the dollar index. So the data stops up here, or it starts up here. Sorry, this is way back from 1986. And you can see the market's pressed down and a bit of a wave up, another wave down, a bit of a wave up. So, to me, longer term is a bit of a problem. Great for the US, with a weaker US dollar. Yeah, I saw my mate. I mean, this is one thing with your trading. I've been a bear for a while. These markets don't make a lot of sense, but if you're not in them, I mean, you're obliged to be in at the moment, because if you're not, you've given up a whole year's generally of just some good action. So even though I will spruik one thing, I will be in. No doubt about that. If something's set up, you've got to get in. And the ASX at the moment is ticking higher, and it looks technically like it's ticking higher. Whether I believe it shouldn't be here, I mean, say not so much the ASX, but say the US, the S&P, the Dow, and Nasdaq, I don't believe they should be where they are. I mean, you can argue black and blue. They're all overvalued. They're just getting pumped up by extra money, flushing around, sloshing around in the system. Where's that money going to go? When nothing's performing, you've got one asset class and it's shares, and if it's going up, you go with the flow. Whether they're 5% overvalued, 10%, 20%, it doesn't matter. They're still going up. So that's sort of the story for me. You know, thinking it's over there, which is one thing, but trading what you see. I mean, they're two different things. Um, if you are not trading what you're looking at, and you're trading your opinion, and you happen to be a bear, you've been smashed. Well, not smashed, but you've just left a lot on the table for last year. And I was thinking that original sell-off back in Feb, I thought we're going to bounce. It's going to be like the GFC. We bounced 50% of that move down. Originally, everyone thought it was over, and then the real beating came. It's never came. Sorry, it's never hasn't. It didn't come, um, which I was expecting. So there was sort of that time where I thought, well, if we break this level on the ASX to the upside, I've got to be in. I'm going to start looking for those buyers. So I had a list of what we're looking at, and it's just been was buying on the way up. So it's irrelevant what I think because I'm not the smartest tool in the shed. But you just got to trade what you see. So in saying all that, yeah, it should be up. So at the moment, this is a dollar index. So the weakness in the dollar is going to help. If it is, this is a weekly chart. Don't forget. So the time frame, the bigger the time frame, the slower moving. But when you're looking at it from the way you look at any other chart, we've got resistance up here that's bounced off. So what the market's had a bit of a pull back from these lows, and this is lows back in '08. Bit of a pullback, rally back up to about 103 level. We've got sold off, bounced back, retested up towards there. And that was, what was at the start of the year? March last year. And that was on the back of that original fear-driven, safe haven-driven spike. And then it collapsed after that because everyone was looking towards stimulus and just that flush of dollars in the system. So I don't know how they're going to work that out, back out of the system. I mean, I don't know how it all works anyway, but either way, you've got a lot of US dollars slushing around to go somewhere. Stimulus checks, they're saying they're pumping out stimulus checks to people, which I don't think if you need that stimulus check to pay your bills, you probably need a lot more to pay your bills. And if you don't, you're probably going to pump it somewhere straight into the market. Who knows? That's what's been happening in the past and supporting markets. So the US dollar, we're down on that zone. Okay, and that's quite a broad zone when you look at it from a weekly perspective. But the US dollar weakness has been supportive of the US market, supportive of probably not so much gold at the moment, but your commodities, copper, oil, they're all they're essentially a currency. Same with Bitcoin, Ethereum, all these sorts of things are the US dollar based currency. So a weaker US dollar, will push things up. Say the Aussie, the pound, the euro, longer term, apart from the yen. So we're down on that support. We've driven down from that high down to support, and whether or not this uptrend is, whether I'm right, and that is the uptrend, and it's broken. So what do we expect from here? If it breaks, it doesn't mean that we're going straight from an uptrend to a downtrend. It could mean that we're going to, fluff around sideways for a while, and we may have to build a lower high. Which over the, if we do something like this over the weekly basis, back up, and that's going to take a lot of time to play out, isn't it? Because it's a weekly chart. Simple as that. If we go down to just have a look at these dailies just to see, because I think the US dollar is a big area of focus for everyone, whether or not we can hold this. So we just start to keep grinding down on a daily basis. At the moment, the lower high is at 94.65. What are we now? Just over 90 and a half, just under that. At the moment, whether on the daily basis, we are just going to drive down and keep holding, your daily lower highs, pressure down, consolidate, pop up a bit, flush out some shorts, and continue our way down. Either way, we're down that weekly support. So it's an area where you can expect some volatility. So for me, I mean, looking at after that weekly, I'm sort of biased. We might at least flush these lows, below, say, down towards 89, which, makes a bit of sense. And then we pop back up. It is extended on the downside. Thing is, momentum's down. So if we get with stochastics, if we start popping back up to sort of this overbought territory and we're at a lower level, it's going to be the trend is your friend. Momentum's down, and the market's going to tick away to the downside. So we'll keep an eye on it, it all sets up for a good sort of commodities boom. I guess a lot of people have been talking about, but we'll have to wait and see. It's going to flush a lot of people out in the meantime. Everyone that's waiting for commodities boom now and jumping in and then flushing back out. Gold's the perfect example. People, you can see it. They're buying into gold stocks at the moment. Aussie stocks, I think today is quite positive, yet gold's down. For me, I think gold could be pushing down more than anything else. So the people are buying cheap, so-called cheap. Gold it has a bit of a pop up. They're in, bang, turns around and dumps on them again. and all these people, there's a lot of people that'll be getting hurt on the individual gold stocks, unless you're just happy to hold an average into a position on the way down. I don't know, but you've got to keep an eye on what's happening with gold, because if US dollar has an almighty rally, it's going to pressure gold, isn't it? Because it's in, like I said, in US dollar terms. Let's get over to, this is what interests me. You go to probably don't know, we'll stay on the daily, but actually we'll go to the weekly charts. Longer term, I mean, look at this kind of a rally. If this is your longer term average, in essence, or this is your sort of your trend up, we are well and truly stretched away from that trend. And whether or not that's major stimulus based, so we could be getting set for a major move back down to retest these lows. So 2,500, for instance, that's a massive drop on the S&P, the big S&P. And you go look at the Dow, probably, maybe something similar. I'm not trying to rile the bulls up, or the bears up, sorry, but we could be looking somewhere in here for support. That's 2,100. That's 1,000 points drop, is it? No, 10,000 points drop from here. But all I'm seeing is really a stretched market, and now it has been stretched. Don't forget, it's been stretched for a while. We're stretched up here. Momentum was up. The difference for me is that with MACD, I like to see when you're going for that below zero to above zero. Okay, so at this first point, we were stretched if you're just looking at stochastics, but the momentum's up and it's only really just got started. Second time round, we got a bit stretched into the highs just when we were sold off. You're going to get a reaction there. Okay, we're a little bit more, we're sort of above the zero line on the MACD, so the momentum's still kicking in. But as you get sort of stretched the third time, we're up at highs again, new all-time highs. You've got to question how much has it got into it. I mean, there's nothing to say stochastics can't keep flushing around between that, 50% and overbought. It can keep doing that, and every pullback's getting bought back up again. But sooner or later, that circus or the merry-go-round is going to stop. Whether it be, and I'm just trying to get in my head, if it's going to stop, what's going to be the trigger? Whether we see it coming, or are we going to see it coming? So the way I'm trading at the moment is a defensive manner. Jumping in the stocks, but being defensive on them. It's probably caught me in two. GMA, we got a partial and then got stopped out just above break even. And then it's gone back up, straight back up to the highs again. Who's to know what's going to happen? That's very volatile action. If you go and look at GMA, what was the other one? Incitec Pivot was sitting on some really good profits and then got stopped out today. I mean, that's frustrating because it was looking good, and then report open low today, stopped us out and straight back up again. So, that's not your normal market action, and that's not market action from a very, very bullish market. People are sort of still on edge, if you ask me. So that's the Dow on a weekly, ticking high, looking stretched. Not as bad as the S&P, but the S&P has got a lot to do with the Nasdaq. This Nasdaq, which is well and truly stretched. So if you just take a basic trend line from these lows, and you can see this is way back in, say, 02, September 02, touched sort of those lows around 08, and then we've rallied back up. So if you're just taking, well, let's take something a bit closer to the mean, even something like this. There's a lot of room to move on the downside if things unwind on the Nasdaq. Now, if that unwinds, the S&P is going to unwind because it's a major bulk of the S&P is some of these big the fangs, and then the Dow's just going to come back down in sympathy, and the whole world really is going to get a bit of a sell-off, I'd say. But in saying all that, we're not trying to guess. I mean, people have been caught out many a time guessing the top. I mean, the only thing we sort of had that momentum up that was into August last year, had a bit of a fade off, going from that overbought back to the midline, straight back up again. But momentum in this second push high is running out of steam, I would suspect. If we get into the daily, that daily, it's been quite consistent, but it's just how far, where's it going to go to, really? It hasn't really broken any key levels, even on this little pullback here. It really didn't break a key level. Key level was probably down here, even on your daily. A bit of a pullback, consolidated, and then we start to build again. So for me, on your weekly basis, this would be your key level, holding this trend up. And on a daily, you'd be looking at the moment, we're looking around here. So for the Nasdaq to break it, to really start to show some cracks, you would expect it's going to break 12.9. Okay, that's about 900 points away at the moment, so there's still some room to move on the downside. Flush out a few bears, or bring in some bears, flush out a few of the bulls, still hold the trend up, and then go. This is on a daily basis. So yeah, even looking at go over to the DAX, I thought that might have broken down. Just sticking with the daily, I thought this was going to break down right up here. It's probably on a lower time frame. Let's get rid of that. Go down to the hourly. Yeah, it does. Reporting season, it just flushes people around. Markets, it's just people locking in some gains, seeing the week open, algos attacking the open, especially with this intraday. I feel the algos sort of matching it a bit lower. People jumping out because they've seen the week match because they're locking in some gains and it turned around and reversing them. You've got an inside level here on the DAX. I thought it was going to break down here. I was looking more at, to be precise, I was looking at this. I thought if we break down there, yeah, we're going. I was actually back here. We break down there, we're going to hold a lower high. There's no reason why we can't hold this 1400, 1450 zone and work our way lower. If this level is going to stay intact, but it's kind of too, holding this inside level, we could also be arguing that we're heading back up to highs, retest, and then go, on the DAX. Because everyone's factored in, I think, well and truly factored in the recovery. You can't say we're factoring in our recovery at the moment because that's all we've been looking at with stimulus. And it's just how high can we go while the stimulus train is still running? It's in my opinion anyway. So if they start saying that we start looking at inflation, why is there need for stimulus if there's inflation? Is that going to be the driver for a big wave of profit taking and maybe a sell-off, or is it just going to continue to rotate from one sector to another and propping up the market? Because yeah, just because. So yeah, I'm sort of looking at that. I think inflation is going to be the problem going forward. If that starts to pick up steam, don't expect the US Fed to raise rates anytime soon. They've already mentioned, they've hinted at that. They're still worried about jobs, so jobs haven't come back the way the market's come back. Okay, we're into new all-time highs in the market. We're nowhere near full jobs capacity, full capacity on jobs or labour market in the US. Australia, I don't think we are either. So there's some jobs that are going to be permanently lost, and whether they can mend that, I don't know. Especially in the US because it's sort of leading us around as well. If we go, as a DAX, look at the UK, it's starting to break out, which is not a bad sign. I'll go back to the daily. I just want to see what the dailies. I haven't really looked at the UK properly. So with the FTSE, if that's the case, if we've got this is a leg up, if we just take it sort of from here, this low, okay, up, contraction, up. We still got some juice, which could be taking us back into sort of the lows of this range when it broke out. Okay, so that all sort of marries up okay. So really, maybe this is a bit of a breakout in the UK. It might be worth just looking at some UK stocks or trading, the FTSE itself. Trading it sort of with a long bias. If you go down to that, like I was just looking at that hourly chart, that's your pullback on your hourly. We're starting to break up. So to be, what do we do? Expand that? Do we come back in? If we hold support, then look for that trend up to continue. And we're looking sort of at least to these highs again at 6,900. It's a couple hundred points up, or we're looking to extend that and we're going back to 70,000, say 7,100, which on the FTSE is another five to 600 points. So that could be pretty good. So the FTSE is looking more positive. DAX, like I said, if it holds this level, it's not looking so positive. It could roll, but at the same token, it could punch straight through because it's holding a higher low. So this, just depending on what's happening with support. So we're really interested with the DAX of where it is right now. But don't forget, if the Nasdaq, the Dow, and S&P are just going to keep ticking higher, there's no reason why the DAX won't go with it. They're all looking at the same thing. Everyone's waiting for a sell-off. It's not coming. You can see by the jitteriness, you get a bit of a sell-off. Where's my mouse gone? He's disappeared again. It's on my boy's computer. There you go. Here he is. He's back. Okay, so we've got the major indices. I just want to look at crude before I get too long into it. Crude's been ticking along nicely. I mean, look at that power. If we just go back to the daily, probably not going to see much in the daily because that big flush. But the daily is the levels. I'm watching it. It could be right up to 65. Where it's traded back in April. We'll adjust everything here. So the trend is up, the momentum's up at the moment. We're a bit extended, which not surprising. We may need a bit of a pullback on the daily. We've had that, consolidation below this previous low, which we're talking about for a while. Consolidation, held it, bang, up she goes, cleans out any stops below that, sorry, above that, and we're heading higher. And that's heading higher on that same expansionary narrative or economic recovery narrative. The market get back to the norm in a way, which makes sense. And if you've got the US dollars, continually finding weakness, that's supportive of oil as well. So potentially we're looking up. So if you're just looking maybe as an inside level, we could be looking right where we are at the moment before we have a bit of a pullback. But each day at the moment, it's looking like it's ticking higher. So we're either going to just, on a daily basis, maybe just some heat come out, reversion back to the mean, meaning back to the averages, back to the EMAs, and then pushing higher again. I don't know, but if we go back down to the hourly, just see what's happening. You can see it's well and truly extended. So that was quite a clear trend up, rolled, tested the inside level. So for technicals, that was beautiful. Tested this level that it traded into just before it broke. Everyone would have thought, okay, we're getting a bit of a lower high in here. Hadn't broken any trend just yet. Broken any anchor. That was really a key anchor. You get the move up, anchor here, another anchor here, pushed up through the highs, retested the anchor, and just went bang, up she goes straight away. So really, it's just probably trading above. Okay, taken off above, above 60. So that's good. I thought we might get there tonight. So the US is closed tonight, so it's probably just within a market. It's just going to plow higher. So whether we get some sort of profit taken here, we might flush that level, come back. But if there's going to be profit taken, you want to be watching for lower high. If we don't get the lower high, because you're chucking away its upside. But that hourly chart looks very positive, just stretched. I'm not ever going to buy something like looks like that when you've got your stochastics extended, momentum's up. I'd rather see what happens when that some heat comes out and then adjust. So what I'm saying by heat, I'm looking at this stochastics potentially roll over. I'm not should be more of a roll over. We start to come back to say that 50% mark on the stochastics, and we start holding, study something like this. That's what we're looking for, and see what happens to the price. Price doesn't really go from those highs and it consolidates. Look for that expansion straight up and through. If we have a bit of a pullback, look for your high low to form. Because momentum with the MACD is still heading higher. You can see that's quite clearly, and it's knocking out of hand at all at the moment. And copper is the last thing to sort of keep an eye on that. So if you don't, like I said, if you don't believe in technicals, look at that flush lower. Traded some stops because that was a clear support zone on your hourly chart. Normally I'm looking at the 30-minute chart. Clear support zone, flushed it out, bang, straight back up. So that's still pointing to a positive market as well. Yeah, it's not really supported in there, but okay. So yeah, the macro picture for me is still pointing in the same direction. Nothing's really changed. It's just we're extended pretty much. We're extended on crude at the moment, especially on the hourly, the lower time frame charts. Even on the daily, we're looking extended. Copper, go down to a daily chart. You extended it for me as well. Look at that. We're getting extended. Momentum's potentially running out of steam. If we get extended here, we start getting some selling pressure in. Yeah, we're extended on that. We're extended on the current. We're pretty much everything. But until something changes, there's no need to get too bearish. It's really the reason why I continue to look at these sorts of things is to keep, a plan of attack if something happens and it's a defensive. It's your risk management. You're always managing risk. You shouldn't, as a trader, you shouldn't be looking at the market saying, "Oh, it's just a bullish market," and just getting completely bullish on the market. And just anyone that says, "Okay, we're going to roll over," knocking that on the head, because it will roll over sooner or later. We don't know when. So all we're trying to do is manage our risk on the upside, knowing that it's going up, but bearing in mind that the market's looking a bit long in the tooth. Look at that flush down on this is the ASX, that flush down, bounce straight back again. So that's, again, a perfect flush if you're looking in terms of these lows. And that's, I'm going to show you that. When you're looking at that, as soon as we got that, this is on the daily, don't forget, that push into that support, you go, okay, we could be starting to break down, but you want to close, you want to trade and close below that level, because then what you'd be looking for is to come and retest to that level or just above, dragging in some buys and squeezing them back out. So if the market's bearish, it needs some fuel to get on the downside. But what happened the very next day, it traded below, straight back up and finished on its highs, well, roughly. So it was a green candle the next day, which is you're not bearish at all. So it's just flushing some traders out. We've got down to this low as well, traded that to a T, took out this low. Really, the trend hasn't changed. It's straight back up again. It's more of just your flush. So that's what I'm looking at on the ASX. We're still ticking higher. Longer term, can we get into new all-time highs? Everyone else has. Well, all the US has. They always do. Absolute gun-ho market. DAX has traded into new all-time highs since the sell-off. FTSE, I don't think has, and we haven't. So whether we can continue this party, if it's negative on the US dollar, I'd be assuming yes, we'd be looking up towards being a heavily mining weighted index. It's commodity based. So if we can drive that, if there is going to be a bit of a sell-off in the US dollar and you get nice run up in commodities, then that should be supportive of our market and trade higher. You would think anyway. We'll see how we go. Yeah, it's been just plugging high. This is, I think it was about here. No, it was probably at this stage when I thought if we're going to roll, we're probably going to roll here. We consolidated, extended up, and then we extended this leg, consolidated sideways, flushed a few there, waiting for that. And even in here, if you're looking at this, that pullback there, okay, really want to get right in this. I think it's worth talking about. That on this leg up, okay, so you've got pullbacks. You can see there's minor pullbacks, especially in here. Extended up, retested the anchor to this leg up, to this current leg up, held, grinded our way back up to these highs, flushed back down, and all we did was go and retest. So we're pretty much range bound since then. Held an inside level here, which took out only in a minor scale these highs, but it was this higher low that was really, you've got to notice and focusing on that. If that builds a higher low out of this contraction, you keep retesting, you're essentially going sideways. The longer you go sideways after a leg up or a leg down, the more likely there's more to it. Okay, so what I mean by that is if um, let me just draw that up. If you have a good leg up and you extend up, and then here you're getting bearish, but we start to spend some time even flushing out, but we spent some time really holding that level. The longer you sort of do that after a good solid leg up with not much emphasis, there would be a lot of people expecting that to come down, and time again they're proven wrong. So sooner or later, that market's going to rally to the top. If it can't go down, it's going to go up. Simple as that, especially with the indices. And so that applies to a lot of markets you look at. You might look at crude or whatever it is you trade in your currencies. If they push into a level, especially, and they consolidate, if they're consolidating those gains, then there's a good chance it's going to power through, because anyone that's getting bearish off that level or anyone that's is locking in, so there's sellers coming in, entering a new position, short, and there's longs that are closing. But if it's not going anywhere, it's getting soaked up by some new longs as well. So what you're looking at is an area where longs are still strong, okay, in something like this. And if the longs are strong, sooner or later, anyone that's building a short position is going to get squeezed out, you would think, especially if you start holding a higher level. That higher level, like we saw just in here, was a bit of a heads up. Okay, if you're short, get out. Okay, so it's the same. You flip it on the downside, um, especially when you're consolidating. When it's just a straight move down, it's a different story. But from April, yeah, it was in here. So when it bounced and you were expecting that second, I was expecting the second leg down there. It just didn't come. So when jumped in a few longs, tentative through here. And once we got this, more longs again. So it's just continually looking at that macro picture. That's probably, really, we looked at the dollar. So we looked at the key markets. Let's look at gold. I know there's a few gold bulls around now. This is on your daily. Whether we're just, so it's really just trying to find a good support zone. Are we trying to hold here? Apart from that, this is quite obviously your key lows, a low in here and a low in here. Um, I'm going to start from scratch because I think that's going to get messy, isn't it? So we've got through these highs. key lows. Maybe, support could come in here. And if that's the case, with a long way to go down, which no one really wants to hear, if it's from here, that might take us into this zone eventually around the 1700, which again, if you're a bull on gold, you don't really want to hear that either. If we just take, some sort of squeeze, if that's what we're doing in here, and that makes a bit more sense if you're looking at the daily, because you've got these inside levels. Look at that holding again. So we've got pressed down, tried to come up, held an inside level, pressed it down through the previous low, come back up, retested it, failed to a lower level. So it's got back up here again a third time just recently, probably early Jan, got back up to that 1960 zone and failed again. So are we going to continue fail? Or continue to fail? Which on a daily basis, yeah, we've got, just trying to look at all this zones through here. Maybe we're going back into that 1750, 60 area. Again, if the US dollar completely capitulates, it's probably going to help support gold, and you'll see gold have a bit of a rally. But at the moment, until that, if that US dollar is going to be stuck in that weekly range down on its lows, gold can keep trickling lower, keep easing lower. But at the moment, on a daily basis, you can see the MAs are down. That's the contractive mode from the massive that massive run up. We're contracting at the moment. Contraction on that sort of, your weekly, your daily also means that it still could be a lot of room to move on the downside. But either way, I mean, that looks good. If you can buy some gold stocks now and just hold, yeah, you might be okay, but not if gold itself takes a bit of a beating. Gold takes a bit of a beating, then you're going to get your stocks in the ASX are going to take a bit of a beating. And if you happen to load up long at higher prices, the rally might only get you back, or you might be missing out a lot of gains by not timing it better. That's why I'm just going to start looking at some gold stocks, but I really want to see gold itself, and probably Aussie dollar gold, show more signs. Yeah, show some better signs. That's Aussie dollar gold. We're down sort of in this zone where it makes sense if we can rally off that 23.35. It's pressing down there. It's pressed down there a few times, rejected up off it, down into it, rejected up off it, rejected. Are we going to reject again? Are we going to flush through? This could be the third time lucky we do go through. It could just be a flush and we bounce straight back again. It's a fairly solid trend on the downside there. And if that US dollar, like I said, the US dollar keeps going down, Aussie dollar is going up. So gold in Aussie dollar terms getting more expensive. Sorry, cheaper, which could play into buying some Aussie gold stocks, but we'll see. So back to gold, I don't really see too much love in the near term. Just go into some lower time frame charts. Gold, yeah, it's holding in here. It was holding in 1870. Reacted down off that. So if it can't go up, it's going to attack the most recent key, sort of a support zone, and flush it out, which it did. If it couldn't go up here, it flushed that support out, went back up, tried to go, and the second time it took out that lower high, but you can see it just couldn't go on with it. So we've had to go and attack these lows, squeeze out some of these buyers. So if we're in the midst of doing that again and we're getting a lower high in here, are we going to test these lows? Are we going to go, back up to here? I'm sort of fancying, by looking at this structure, a potential continuation move down. We've had that move up off this level, 1830, 1835, back into it, straight down below it, retested it from underneath. So to me, really retesting it just depends if these lows can hold. And if these lows around this zone can't hold at 1810, then we're going to break through that and we're going to be testing towards these lows at 1785 at the very least. So that's it for me on gold. See how we go. Has anyone got anything to look at? You want to take a look at? I know I've got one on email from someone. Let me just grab that up. And I'll find out what it is. QFE. Okay, let's just go and look at QFE. And then we've got BRN from John, and anything else you want to take a quick look at. By the way, I didn't really take too much notice, but we've got a few, potentially, this is ALU that are starting to look a bit short. This is on the weekly, don't forget. So ALU, Altium, had a good run up, got sold off obviously in March, bounced back, but it struggled at a lower level. So it traded through 40, or traded at 40, but that was just through the highs and then failed. So let's just get that. So if you're looking at this, you can see that move up there, big sell-off. Okay, that could have been overdone because it's a bit of a shock to the system. We bounced back, but if it couldn't bounce back to the same levels and continue on its way higher when a lot of other stocks have, and it failed well before this year, it failed into about October, November. It started failing and it couldn't get through these highs. So when you can't get through those highs, like I said, you start attacking the lows. And if you break the lows, then it starts to show you that bears are coming in, bears are coming in, bears are coming in. And if the bears are coming in, where are they going to? Potentially back down to this low. We could be looking towards 23 and even lower. We don't know because from a structural perspective, trend up, fail, tried to go again, key lower high. So I think if we start to break down below 28.20, then there's a potential short through there, through 28.20, stops just above 31.85 or thereabouts, which is just this lower high. Let's just go to the daily. Short's just above, say, 32, break below and see where it goes to. See if we can get down to 24 or even below. But I was just thinking there's a few shorts that are starting to pop up on my radar, which is not conducive with the bullish market, is it? QFE. Okay, that's quick feet. It is bullish on the daily, but is it longer term? That's pretty much all the data. For me, I don't like to see momentum starting to tick up. It's had a good little run up. Was it supported on volume? Yeah, a bit of volume coming in the last couple of days, but the thing is it's down today and there's bigger volume coming in. So I'm not a big fan of that. I don't really want to see that. I want to see another green candle supported by more volume because that would suggest higher prices. Okay. At this stage, yeah, we might. What I'd be looking for from here, if anyone's looking at QFE, what I'd be looking at personally, I want to see what happens on the first pullback. If we get a bit of a pullback and the stochastic rolls over from selling pressure to buying pressure, the selling pressure gets used up, we start holding a higher level, maybe an inside level around 45, thereabouts, then there could be reason to think that it's going to trend higher. But at the moment, it's probably the first real push up that we've had, and you want to see if that's got any follow through. So let me just draw that up. So when it's it's a different thing. I deal a lot in corrections. I like sort of that phase. That's a leg up. So this is just continuous trades. You're looking for continuation patterns. By continuation, I think you've got something like this. It's your first pullback, even on the daily, and you're looking for that somewhere in here. You're trying to buy as it projects its way up. Whether you drop it down a chart, you might trade a 30-minute chart. The daily might set up. I mean, look at this prime, this move up here, pullback. You've got little entries through here, another little entry through there, but it's a continuation. Okay, this is all part of a longer term leg up. Now, this is a longer term contraction. Okay, so whether that's just on a weekly basis, this is what we're looking for. The same sort of thing. That's your leg up, which is here. That's your contraction. And we're sort of somewhere at this stage at the moment, for argument's sake, if that's going to go off your weekly and we're looking for some sort of hint that this is going to continue. Okay, and we're looking in this zone to see are we going to be start of a new leg up on a weekly basis, which means we're going to get some really good opportunities on the rally, or are we going to head high? Are we still got more downside to come? So that's why I'm sort of looking at this going, okay, it's probably the first significant pop we've had. Just clean that up. Significant pop we have, but is it too early? If you just dive in here, is it too early? And it's probably only until today that it's actually broken. Potentially is a first heads up that we're breaking this contraction lower. And that's just by, your simple line. I still wouldn't buy it. I'd be looking for my higher low as confirmation. Okay, so maybe just say something like this, for instance. You pop up here, we pull back, we hold a higher level, and then you can work your entries from there. We're sitting on top of the MAs, which is good. We're not sitting on top of the MAs. The 20 is below the 50. Yep, expect it to turn, but expect some sort of heat to come out of this little drive up, and we're going to get into a pullback. So that's what something like that. that makes sense. Everyone see that? Is that a bit clear on the screen? Or is it hard to see? But yeah, I want that first pullback, see what happens, and then if we can drive higher, I know where my entry is going to be, and I know we're going to hold the MAs. The MAs are starting to turn up, and once they start to turn up, you get a bit of a drive higher, and then you're looking towards, your first high 85 and up towards $1. Okay, so that was QFE. Go to BRN. I hope that's Look, that's John. You got that? So it looks like it's setting up again. We got in that, flushed out. I don't know what we made on that. I know we made something, but I think it was the only secondary pullback that I got pushed out, which is fine. It looks like it's setting up again. So if you just, I don't want to do that, do I? Yeah, let's just go there. So this is what I'd be looking at as a new entry. So what am I looking for? Is it in place? Okay, we come down on stochastics, great. So the pressure from selling, we're oversold here, we're oversold here, oversold here. Difference is we're trading here and here, a lot higher. Sorry, a lot lower. Last few times we're oversold. So this is really a key level through 30. Okay, we're looking for another key level to hold. It sort of matches off through here around that 50 cent mark. We bounced around between there. We broke up through. We've retested it. Another retest, flush through. We're starting to hold it up again. So yeah, everything's looking fairly good for a continuation higher. Potentially it's not ready. I mean, if you buy here, even though what I just said, we're sort of coming up off that level 50, we haven't broken out yet. Let's just take one step back. Yeah, so potentially it's going to, but we haven't broken out. There's nothing to say we can't come off that 60. So if you're buying up here, you're risking that we're not going to hold a high low and we're just coming screaming back down below 50, back down to 30. And it's this longer term contraction we're going to be looking at. It looks pretty good. I mean, in saying all that, even the momentum, we've had a bit of a momentum push up with this little rally. Everything's come back, selling pressure come back in. It's come back to the zero line. Love seeing it come back to the zero line in the MACD. And if it's starting to turn back up, it looks like momentum's starting to rise again. All I'd be looking for a new entry is really if we can pull back to say 55, hold a high low, pull back, hold a high low, inside high low, and then go. So really for me, it's about the setup. But either way, longer term, that's looking really good. I'm betting if you look at the weekly, it's looking good. Yeah. So we had a big spike up here. A lot of heat's coming out. We've had another push up. Pullbacks getting met with some buys. Not 100% confirmed just yet, but close, very close. I think it's looking really good. You don't want this kind of thing to happen. If you can see this red candle, bit of flush, you've gone long and then bang, and then we spend the next few years doing nothing. You want to be buying on the rise essentially. That's pretty much what it's all about. BRN. So the next one, FFG. That fat fish, yep. Well, not much to say about this. I wouldn't buy it because it's too high for me. It's truly stretched, it's gapped. We're giving up a lot of, if anything, this could be an intraday short. And it's traded through 10 cents. What news has driven that up? Okay, I don't know what FFG's got to do with it. Maybe it's ICI. I don't know much about the fundamentals, but looking at this, obviously that news, and if you also don't believe the markets, a lot of, what is it? You don't have leaky boats everywhere. Not so much leaky boats, but if a lot of people know what's going on prior to the news releases coming out. Obviously, news release come out today. That makes sense when you get a couple of good pushes higher 2 days before on volume 2. So, it's not right, and they've got to sort that out. I mean, it's too many things getting leaked, insider knowledge, which is illegal. So if you're buying the last couple of days, say Thursday, Friday last week, I don't think there's that many technical traders willing to ramp it like that. So somebody's known something, and it's obviously come clear today. Buy the rumor, sell the fact. I think that's what it could be on FFG, just by looking at that chart and the way it's rejected that 11.5 mark. It's opened up at Opened up at just below 8, traded up, rallied straight up. Let's look at an intraday chart. I wonder if there's much volume. 13 million's gone through today. ramped it up, and it's just been drifting lower. So, if you bought it the last couple of days, you'd probably be thinking about locking away some gains at least. But yeah, for me, I want some heat to come out. If I want to buy that, I want some heat to come out. I want this kind of action, come out, support a higher level, retest it even, and then go. I wouldn't be stepping near this one just at this stage anyway. But if you did 2 days ago, then good on you. It's fantastic. FFG, what was the... All right, let's see if we can whip through these. Got a few to get through, I didn't notice. Looking good. So sort of in a bit of a range. So what we're looking at with ARL, what I'm looking at anyway, it's come down, it's had this little pop up. You don't want to be caught when it's popping up and you're buying now, for instance, but we can't get through this high at around 62. I'll draw it up. So for me, it's all about, yep, this high. Are we coming off a high low? Okay, that's the question. If we're going to break up through, I'd like a pullback to retest and then go. Okay, I want that confirmed. I don't want to just be buying here because you're anticipating that break. You're anticipating this is a high low because you would have been doing the same thing here potentially, and then it got sold off. It wasn't too far, but it did get sold off here, and it was all looking okay there. There's nothing wrong with sort of this trade, especially if you're looking at this level in here, higher low, higher low. You're buying the break, anticipating this break. It doesn't break, it comes back down on you, and you get either stopped out or you're holding a loser. Still, well, potentially still. So if ideally, what I'd like to see is a push through, pull back, see if it can retest, and then I'd be looking for that off 60 zone. You might be giving up a bit, but at least you're getting on the right side of the market. And you can see the MAs are starting to trickle higher. The stochastics are starting to push towards that overbought territory. MACD's in a good spot. It's starting to rise, meaning momentum's starting to lift. We have got a potential higher low in place off this low, which is good. So for me, it probably is looking fairly good, but at the moment, I just want a bit more confirmation before I diving in that one. What was the next one you've got there? I'm on the weekly, aren't I? Yeah, and it's extended today on the on your daily chart. So what happens? It's really just what's going to happen on the first pullback. There's a pullback, hold at 55, 50 or so, and start to lift again. Then great, off she goes. Volume lifted today. It's getting rejected there a bit of a concern. We'll see how we go. AOU, that's been pretty good today, hasn't it? No. Don't like the way it's rejected today on some decent volume on a news release. So what is a positive news release? Yeah, I don't like. I mean, this is not. It's not a good thing that markets are ramped up into these news releases, and then they're getting sold into positive news. It's catching retail off guard that have been waiting potentially, jumping in on the news and getting sold into. So this is what we always talk about, the pump and dump. There's a lot of pump and dump groups over Twitter, everywhere else. They know stuff that we don't. Pump it up, looks great. Technically, it looks good. News comes out, they might dump it. They've got cheap shares or whatever it is, but I just don't like the way that was rejected today. On the back of that news, it's opened up. Well, it traded 31.5, opened at 30.5, and then straight back down again. It's been selling into that strength since. I mean, technically, it's still in an uptrend until this level through 22 is broken. Okay, and it's quite clear if you're looking at that. If we're looking at that zone, it sort of takes us around, not so much that area, but that zone through there. Okay, so we could easily trade into 22.5 and reject it, and then it's looking a lot better, and that sort of negates that double top, that minor double top. There's nothing to say that's a double top, and we head down, trade it into it. You don't want to trade through for a couple of days, get down to 20 as such, clean out this low, and then start to grind our way back up, because to me that's going to be, if we do this kind of thing down here, and we start to grind back up, to me that's going to lead to some more selling pressure off a lower high. Okay, so for me it's still, we're still in an uptrend. That could just be a bit of a flush. Anyone that's been buying that news, that's been bought it up, sold into the news, took the profits because they're nervous about the overall market. Then it finds some more strength around 25 and lifts again. Great. If it lifts again, then you're probably looking at a break up through 32.5. But really, with this kind of price action, what we're seeing now, it's about managing your risk. If there's going to be a sell-off, because this is a double top starts coming into play, I want my stop below 22.5. Simple as that. If I'm taking a loss, I'm taking a loss, because I don't know where it's going to. Okay, and there's a bit of volume that's come in too. A couple of days, some decent volume on a negative day today. Not so crash hot. Okay, but if we do start holding, because there's been that negativity prior, coming to the end of Jan, and it got lifted, but it's falling again at that same level around 32.5, 30, 31. Sorry, 32. I'm talking about 32, 32.5. Okay, so that's that there, CPH. That looks a lot better, because what you're seeing is this. Actually, it looks really good. Thanks for that, Joseph. I'm going to keep an eye on this one too. I better write it down. If I don't, just remind me. What's happened on the weekly before I get too excited? No, even on the weekly, look at that. That's great on the weekly compared to where it's been. I don't know, obviously know nothing about the fundamentals. It's just what I'm seeing is just okay. This move up into 2000, end of 2017, 2018, big sell-off, readjustment. But this is the first real time since then, even since back in 2017, which we're trying to hold these MAs. Okay, so on the weekly basis, it's looking great. Volume come in, pushed it above the MAs, and we've been consolidating since, good part of a few months now. Since December, a couple of months, we've been consolidating. But see how it's lifting on the MAs. Maybe it's not ready to go just yet, but there's a good chance if we hold this again and we get, I'll draw it up. I need to drill it down. Actually, probably don't really need to see it too much, but it's key that we broke up out here. We held here, we're holding higher levels. So whatever is happening, it's getting soaked up. So there's someone buying it at a slightly higher level. They're not putting in too much effort. We've got a low, so this is the high. So anything, when we start to push up here, maybe it's just too early. And anyone that's bought it earlier or bought it late in that trend, held through that, as soon as you get that sort of that first negative day, they might just be that's it. I'm taking a small loss. I'm going to minimize my losses or take a small gain on that, because we start getting these kind of days just after it. And if we fail, up here, we open up, we gap up on the open, and all it is all that one red candle is selling pressure all day, then you're probably going to find that we're going to keep, there's still some selling to come out, some buyers probably to step out. The thing is negating that, and what I really do like is that buying, because if someone's building a position, or there's a lot of people are looking at it, not really willing to push it just yet. They don't really want to buy. There's been no breakout, even in here. You've got move off the highs. I'll draw that. Move down, pop up, move down, pop up, got supported, ramped up again, got through this level. But again, it got through that level, not on that green day, but it gapped up below, closed below it. Sorry, gapped above it and closed below it. Not a good sign. So when you start holding back below there, you're probably looking towards a bigger sell-off. And if it doesn't sell off, we start getting soaked up, like I said, here and here, okay, that's a positive sign. So that now what the market's done is put in another month of price action and holding. So ideally, because we've had this good green day here and a bit of volume, I wouldn't mind buying that through a break of, say, was it 27.5, as long as we don't see any difference in price action holding your stop around the 20 mark, because that's really the first time we've had a pop-up of green candle, a pullback, the pullback stuck, sticking at a higher level. That's supposing it holds at a higher level and breaking out again, because it didn't follow through here. That was just the very next day. Got a green candle here, it's selling straight away. In here, nothing happened. It wasn't off a high or low, it was just off a low. Okay, so it's looking good. That's CPH. Bitcoin, we'll have a look at that too. I might go a bit longer today because we've got a few new people and it looks like I like talking about different stuff too. NEA, that's not as nice. I mean, that rejection, gap up, I'm not really liking that as much. The weekly is looking better, but this kind of action on the daily is not conducive to really strong, on that weekly, we could be going through too. So I really want to see, a push up, a deeper push up on the weekly, and the pullback. What happens on the first pullback? The pullback starts to stick to the MAs again. Maybe something like this. then yeah, it could be a goer. So leg up, pull back, went sideways, essentially going sideways. We lifted off 2, but it doesn't mean a lot yet because it hasn't really got, it didn't see any sudden, sharp, hard move up to the upside just yet. Okay, that's NEA. We'll try to get through these faster so we can get through the rest of it. Gin, a lot of sideways action at the moment. A lot of nothing. Good. Okay, this is a good trend up into the end of 2019. It was already getting sold off prior to, was it Feb, March? The market got knocked down. So if it was, if we were up here, the market could have got really savaged in that February, March push lower. Instead, it held up okay. It's holding, but even on the weekly, it doesn't look very strong. And you've got to take note of how's it getting through the MAs. If we're expecting something like this again, this kind of move up after this move down, it's flushed out a lot of that action. You don't want to see this. We're getting just through the highs slightly. Okay, we go back close to the lows, just through the highs. It's not the kind of solid action that you want to see. And if we keep doing this, yeah, it's just going to be a struggle if it does go up, because what do you buy the breakout and you wear a lot of heat before it gets back into positive territory, only just. And that's what I mean. When the market pulls back, so that's our first low. It pulls right back close to the low and then go, okay, we just take out this high by a bit before we have a deep correction. You don't want to see these deep corrections. That's not conducive of a strong, positive, bullish market on this stock anyway. It's more conducive to just a bit of a flush out. Anything negative, this thing can get smashed and we could be back down at 250 quite easily or through 10. Okay, so you want to see in a move up, and this is what we talk about the top third. When you're pulling back to the bottom third, that's not a good thing. Okay, your bottom third is just here. Mid, okay, it's stronger, but when you consolidate around the top third and you do something like that, that's a stronger market, especially when you consolidate for a longer time, then you're expecting that ramp up and that acceleration higher. Okay, but we're not getting that at the moment, so it's not a really strong market on the weekly, aren't I? I think I'm on the weekly. Yep, the weekly. So for me, that daily, that's just more of your consolidation, sideways action, more range bound action. I'll be more inclined to draw a line off the bottom and looking for a high low just off these, flushes. A flush, look for a high low, but it's really only just in here, back July last year. So ideally for a new entry, I'll be steering clear of that one. Sorry, Pete. NXT. NXT looking a bit better if we can hold above 12, 30, 40, which is probably around this high. 12, was it 1250? If we can hold this 12, 30, 40, 50 move, this pullback, and we start to stick, and it's a deep pull, you can see the stochastic go from overbought to oversold, but we're holding there, that's a good, strong sign, okay? And then we just want to see what happens on the rise, potentially get in because it's spent some time, you've had uptrend, sell off November last year, retested those lows but at a slightly higher level, just below 1150. Then we've lifted again and we've taken out this high. Okay, probably should make that a bit bigger because we've just taken out this high. What happens on the first pullback? We start to stick on the MAs. Then this is your leg up. First pullback, we're looking for that same sort of move from the higher the better, and which could probably take us up towards that $14 mark. So that's looking a lot better. Okay, NST, yeah, that's one that was on the short list. It's more of a weekly basis. So that the problem with this one, it's just got this lower high come to play, and it's just below the weekly. Make that a bit. I'll drill that in a bit more. Okay, so we've got. Oops, here we go. Back again. So what we've got is this rejection up here. Okay, so when it rejects, it's searching for the next bid zone. Where are we going to get new buyers? If it was strong, should have held up through 13. It should have come down, potentially held up above that 15 or so, somewhere in the midpoint, maybe. Instead, it's gone through that level. Okay, so we just take that out. Bear that in mind, it's gone through that support. We've come back up, and you can see there's a couple of, this is on a weekly Weekly, don't forget, a couple of red candles in there, which is not too great. You don't really want to see, if you're bullish, you don't really want to see some weak weeks in there, some negative weeks in there, okay? You want to see, and then we've got this rejection again. That week it didn't get up through, failed through the previous high, and then we got a couple of red candles. So we've got a potential lower high coming into play here. I'll just draw that up. We've got potential lower high coming into play and a breakdown. Okay, if that's going to break down, where's your next level? Around that 9 mark. Off the weekly though, we're sort of hovering in an oversold mark. So you've got to ask yourself, as we come into support or this low, has it got enough oomph to get through? If a lot of that selling pressure has been used up, okay, which is really hasn't got anywhere. Momentum's down, that's in your favor. Momentum's not really out of whack at the moment. It's just what's happening down here at this lows. Have we got enough oomph? You take the break and then turn around like this. You take the break and it rejects straight back up again. That's not what I want to do, but it's holding just below the MAs, which is another really good sign. So to me, the price action looks negative. MACD's all right. I just wouldn't mind seeing a bit of a pop and see if that pop gets sold into and see if we can get something short on the daily basis. Okay, so maybe, something like this. You can see this little green candle. I'll just draw that up in here. If you get something like that, and if you draw, pretty sure if you draw a trend line there, you take those lows, you got the lows here. Okay, we broke down, prime set up short, stop there, and we've retested that level, the breakout, 1250. It's just not going on with it as hard as what it could do. Okay, and that probably goes in the fact that people are thinking crude gold's oversold and due for a bounce, so they're still hanging on to these shorts. Sorry, the long positions into NST. So I do think it's a short more than anything. I wouldn't be buying it, that's for sure. I think there's more weight to the downside. Now, obviously, if gold gets smacked down like what it could do, what I think it could do, then this is not going to hold up. It's going to break down through 1150 and trade towards those lows, like we mentioned, potentially towards this zone around 9. So there's a bit of fat in that. All right, we've got through that. Last one we'll get into will be Bitcoin. Let's just have a quick look. So Bitcoin, it's in every paper I can find. It's in all the news. It's in the papers. It's just, so as soon as it starts hitting the radars of everyone, and everyone's asking about Bitcoin, okay, this is like the last run up. This is the big one because they're all talking, 100,000. Everyone's talking that. If you're long, if I'm long in here, I'm going to be telling you it's going to the moon. No doubt about it. Even if I don't believe it, because I want you to buy it and help me. So the more people I can convince it's going up when I'm already set, the better. The better for me. So if you're looking at it that way, I mean, we are extended on a daily basis. You sort of see this green expansionary candle up, took out the highs. Next time it didn't really get too far before we got a bit of pullback, a couple of red days. Another green candle got rejected again at the highs. We'll go into a 4-hourly chart. We're just focusing on this most recent price action. What's happening here? You've got through the high, but we just tested through, fell below, tested through, finished there. Next day, sorry, the next candle, traded through it, flushing out. So what is it doing there? You could ask yourself. It's flushing buyers in, and potentially they're selling into that, and it's coming back down again. So it's struggling to get back up above sort of those previous highs, and it did the same sort of thing here. If you look through here, traded, flush, got a bit of a sell-off. It did trade it up through. So 1, 2, 3 times, it's really failing around that 49.50 zone. And considering when you take into account that everyone knows it's running, it's booming. Everyone knows how many people are on the sidelines to come back in. So if you bought it up here around 49.50, you might have to wear some heat. If you're a big believer it's going to 100,000, that's good. But just be prepared to wear some heat on it. Yeah. Does that make sense? So that's what I think you were just mentioning, is that right? So we've got a bit of a, the fact that it's gone 1, 2, 3, struggling, it might be time that it needs to clean out some traders. And when you're looking at back to the daily, remember this up leg's getting extended. What's happening there? We're just starting to get through this level in here around 46. It doesn't mean it's coming down, but I'm just saying I wouldn't buy it here. I mean, I haven't bought it. We bought it a long time ago and got out before all this. I don't even know where, to be honest. It was somewhere way back when. I'll have to figure that out. I didn't hold it, obviously. Would have been nice to get in, contraction here, it starts hold through these zones, and this is what you want to see. a pullback, starts to get supported. So this is the reverse of what we're seeing. Okay, so if you're looking at it that way, you're looking to buy, you wouldn't have a problem buying it off here. Okay, then we bought it, the market held a higher level, you're buying this zone, it started to lift. Now we've got 1, 2, 3, and we start to rally from there. 1, 2, 3. Are we going to have a big correction of that uptrend? Where could it go to before the bulls start to step back in? We could have a decent correction. This is all going off your longer term, but it's my premises are based around fuel. Every market, everything needs fuel to continue. And if you're now talking to the taxi driver, as the old saying goes, or you're talking to your mum and dad who are starting to ask about it, your long lost brother-in-law you've never heard of, or your cousin is starting to go because they know you trade. What's happening with Bitcoin? You know that it's brought onto their radar, and they either bought it or they want to buy it, and we're running out of fuel. Okay, that's the way I'm looking at it. If we're running out of fuel, what's happening on a technical basis? We're getting extended, obviously. So what does the market need to do? If it's running out of buying fuel, it needs to flush some people out on a pullback. Whether this is the start of a correction and we're heading back down, it's a complete capitulation, don't know. If it starts to, we start to see this kind of action, say it does pull back and we start to see, this kind of action, then that's not really conducive to a big sell-off, and we might be coming back and we start to, find some support. We do a few flushes and then we hold a higher level. Something like that is like this. Okay, then we're rallying back up, gunning for the highs at 50,000 because new leg up. But at the moment, we're looking at this leg up. Is that running out of steam? Maybe not. Maybe not. We don't know just yet. But it's looking like it's getting a bit heavy up here. So for me, I'd just be grinning and bearing it. Looking, if I'm wanting to get long, I want to see enough people flushed out. I want to see, because this kind of action is more conducive of a lot higher prices. This kind of continual extension, it's dragging in more and more people until it runs out of steam and just smashes them. Okay, and that sell-off could trigger the fear into the buyers that bought it off here that don't think it's going to come down, but it all gets the best of us. If you're sitting on a really healthy profit and you watch it come down in a screaming heap, you're probably going to be thinking twice about your commitment, aren't you? Okay, so that's pretty much all I wanted to talk about. I hope that's all helpful, and you got some value out of this. So if you did, it'd be great if you can leave us a like on the YouTube and help us spread the word and tell others that might be interested in joining in. If you've got any questions, just feel free to send an email to support@tradesetup.com.au. And if you haven't been through our website, please do have a bit of a look, take the test drive of the app, see what you think. The more the merrier. And then we've also got a Discord channel which you're more than welcome to jump into. Just send an email and I'll email you out the link. All right, guys, that's it for today. Have a great day. Hopefully you enjoy yourself. We'll see what this index is doing. Up 63. That's great. We'll see how we go. Don't forget, I think the US is closed tonight, so there's probably going to be fairly quiet tonight. Well, it will be fairly quiet. I expect a bit of action in European session. They're able to peter out quickly as they don't have any direction from the US coming in later on. All right, guys, enjoy, and we'll speak to you again soon. Cheers, bye.